All right, let's go. First of all, what I want to do is before we go to the economic calendar, because this is so for those who are here first time, we have two webinars in the week. So today is the first one on Tuesday, and we have one on Thursday. Tuesday's one, pardon my voice, guys. I just have rhinitis, that it's a problem on the nose, and it just got. I'm allergic to some things, and it just got worse today. So sorry for that. Anyways, as I was saying, we have Tuesday and Thursday. On Tuesday, we do the week ahead. So I go through the economic calendar, explain bit by bit, and look at the opportunities that they may be providing during the week. And before we do that, I just want to start addressing my pound dollar position that we had for a while now, since 24th of January. Okay, so since 24th January, nearly a month in this position, and I'm still holding it as it should be. So we got into on the 25th of January on a Thursday. Okay, so because of the pound was getting very, very weak, and it was very close to the NFP that we all believed, and we were correct, to be positive for the US, for the USA, for the United States, right? And therefore, I took a short positions. I don't know what you guys done, but it was an investment advice that I was just saying. I'm going to state every time I get a position on live is just to show to you guys that what I do and what I teach you actually works. I'm not, doing like wasting time of anyone here. I'm doing I'm teaching you what I actually use to trade on a hedge fund. So those other things around YouTube, I don't know what they teach, but it is what it is. So basically, oh, Kamala, you want to draw some some things. So basically, we got the position here, and then we were making lower lowers. And now I've closed 50% here, and then it came back for retracement on the 61 of FEB, and then now continuation downtrend. For a better continuation, I would expect a sorry here. I would expect a push towards, where's my pen? I would expect a push towards something like this. Okay, breaking this bottom here. Why is that? Because therefore we will actually be on a continuation to the downtrend until 123. That is my main target. Okay, so my main target right now is at 123, and my entry was here, and my stop loss was there. So basically a 2% trade. So that means that I risked 1% of my account balance to get back 2% of my account balance. I've closed 50% of this position already. So I've closed, how much did I close? Let me see. Around, oopsie, sorry. Where is this here? Around 45% most probably. Let me check. Yeah, I've closed here. So around 39, 38, 40% of the position. So that means 0.3% of my account balance has been taken profit already. And the trade itself is still running on a nice profit in terms of pips. We are, oh, no, that's not what I want. We are running right now at 139, 140 pips. Okay, the maximum we reached on this trade was 200 pips. So that's pretty good. That's pretty good. Okay, I do continue to expect even more now that I've just mentioned for you guys on the Telegram group. If you're not on the Telegram, as I've just said, there's a few new people here. If you're not on the Telegram, here is the link for you to join. I'm going to put in the chat Telegram link. Here it is. You can click on this link. You can get insights like this every day, most of the days, at least 3 to 4 days a week. Okay. And as I mentioned, the week reports on inflation, employment, and the GDP in UK, they overshadow the recovery in spending. Remember that we had the higher retail sales on UK? Well, we can't forget that we had a lower inflation, a higher unemployment, and a very bad GDP on UK. So this basically overshadow the recovery on that spending, on that higher retail sales. And for me, this is a very strong signal that there will be continuation of a further decline on the pound. Let's see how it will work out this week. Okay, maybe I'm going to show later. We do have some very important speakers as well as events for the pound for UK. Therefore, we may be expecting a little bit of a consolidation or not much movement, low volatility into the market until Thursday. Okay, because Thursday is going to be for me in Australia will be the biggest day. For maybe it's Friday for you. No, it can't be Friday. It most probably will be Wednesday for you. Okay, for you guys, because if you're not in Australia, you're gonna be probably behind us in wise of time frame. I don't see any Japanese names here or New Zealanders, something like that, Kiwi names here, because they are the ones that are in front of us. But anyways, and okay, let's go now for the economic calendar. Let me set my time here, Canberra, this week. If you haven't watched my video yet on YouTube, so ACY Securities channel, this one here. Okay, so if you haven't watched this video yet, I've talked about the whole economic calendar here. I've talked about the Canada inflation, as well as, all about Thursday that I've just mentioned. And something else that I want to talk about later today is the USD JPY. If we look at there, we are at 150 level. That was the exactly level. Let me just put it here. That was the exactly level of the intervention last year. Intervention of last year for the Bank of Japan. Okay, it was here. All right, remember that. So just leave this aside for now. I want to talk to this later, but just bear in mind, okay, that we are on that level. Anyways, so yesterday, Monday, was holiday on Canada, and it was holiday on US. It was holiday for Family Day in Canada. So if anyone here from Canada, I don't think we do have Canadian clients, because it is a bit of strict to get people from Canada to trade in Asia because of legislations. But if anyone watching us on YouTube or something like that, congratulations on Family Day. And we did have Washington birthday, that is basically the President's Day. Okay, it's known as the President Day. And after that, on yesterday trading, we didn't have anything. So we just had like very, very minor news. Only Buba Baus. Sorry if I've pronounced his name wrong, but yeah, that's sort of how I think it is. Speaking from German. And then today, We didn't have much until now, and we won't have much until 9:15 o'clock at my time. This is Sydney time. Just remember that, guys. We're gonna have the broadband speaks tonight, as well as the government Bali. All right, the big boy speaking tonight. Look, I don't think they will address anything too crazy. Okay, they're just gonna address about the inflation, employment being higher, GDP, as well as the higher retail sales, making clear that they need more data to cut and that they are on a very early stages on this sort of timing. So this won't drag the pound much, like probably a little bit up, a little bit down, but nothing more like NFP crazy something. All right. Don't get me wrong. Don't get me wrong. Those speeches can do have effect, and they do have, and they can have effect, and they do have effect on the market. Okay, why? Because remember, fundamentals happen first, not the price. Okay, so fundamentals is a build up. All right, what I mean by that is, let me share my screen here just a second. This. Okay, so we have, let's say we have, let me change the color. Okay, so today we have pound dollar. Okay, so you all know, all right, Bayes correlation. Correlation goes stronger, the market goes down. All right, Bayes goes stronger, the correlation goes weaker, then the market goes up. Okay, anyways, I've taught about this already. Okay, so if we have CPI higher, okay, that is basically inflation. We have higher GDP as well. We have a hawkish central bank speeches. We have hiking rates. Okay, what else? We have good consumer confidence, consumer confidence. We have anything related to the economy of the country better on the news, then this is basically I call this the aggregate. Okay, so this is an aggregate of compounding news or events, whatever you want to call it, of fundamental aspects. All right, so basically, just again, it's a compounding that will generate an effect on the economy, that will generate an effect of the currency, on the currency of that economy. Okay, so if we have a higher GDP, it's good for the currency. If we have a boost on consumer confidence, it's good. Hawkish speeches is good. Hiking on the rates are fantastic. GDP higher, it's fantastic. Remember, guys, I will talk about this later, but if you have three consecutive, oopsie, that doesn't look like a tree. If we have three consecutive lower GDP, okay, the country will be basically on a what we call technical recession. Does anyone know what technical recession is? Okay, so basically a technical recession, it refers to a period of economic decline, decreasing the GDP, as I just mentioned. A technical recession, it does refers to a period, only a period of economic decline by a decrease in the country's GDP. Okay, if we have 2 or 3, depending on the country, consecutive quarters or more lower GDP, okay, then yes, we are on a technical recession. During the technical recession, the economic activity will contract, all right? And it will lead to a decline in the overall output of goods and services, all right? So it does have a correlation with services PMI and manufacturing PMI, because the GDP is a compound of the PMIs, right? It's what the country produced, so that means manufacture-wise, and as well, manufacture-wise, you can do have services-wise as well. So this contraction is often accompanied by factors as such an increase on unemployment, okay, reduce the consumer spending, so lower consumer spending, higher unemployment, lower business investment, because business look at to the economy and think like, nope, I'm not going to put my money on that. We did had 3 quarters, consecutive quarters of lower GDP. That means that people are not spending money, not producing, unemployed. Therefore, I'm not going to put a money, single dollar on that economy. All this can come and say, well, that's a good period. Things will be, real estate will be cheap. Therefore, I will put my money in and try to capitalize on the uphill that will come. All right. So some people get the downhill, looking for the uphill to come. Some people start to already get in on the uphill. This is whatever preference business may have. So recession can be caused by various factors, all right, including the decrease on the consumer confidence, financial crisis, of course, high levels of debt, okay, even the population as well as the government, or any external shock to the economy, like a war, like a supply chain disruption, or whatever happens with a partner country that was very big on buying something from them, and so on. So it's important to note that the technical recession focus the specific criteria that they have is the GDP contraction for 2 consecutive quarters in a quantitative measure. Okay, so economists also use the term recession more broadly to describe periods of economic decline. So whether or not they meet the technical definition based on consecutive quarters of negative GDP, okay, negative GDP growth, sorry. So there you have it. This is what it is, a technical recession. So pretty much if we have 2 to 3 consecutive quarters of decline on the GDP, the country, it is on a technical recession, and it will do high unemployment, reduce spending, consumer spending, and lower business investment. And this is very bad for the currency, okay, because no one will be looking to invest in that country. Therefore, no one wants to hold that currency on their portfolio or whatever they may want to buy, or whatever. They do prefer to sell short those GDBs, the government bonds, the GBs, all right, government bonds, depending from the country, and putting to somewhere else that the GDP is not contracting. All right, so just explaining very quick here for Casey, he missed the explanation on this one here. So these things that you're looking here, CPI, consumer confidence, I've just put CC as easier to write. GDP hawkish comments from the bank, from the central bank, and a hike on the rates. All of this combined, all right, put together, I call it this basically the basket. Okay, if you put this as on a basket and you have all of these, this will actually influence the currency. You can have the full explanation, Casey, tomorrow, because this video will be uploaded to the YouTube. Okay, so I'm gonna send the link. I will make sure to send the link when it uploads to the Telegram channel, and therefore you can watch again this part. Okay, we're on the very, very beginning. What time is it? 28 minutes in, so let's say 15. You can jump to the 15 minutes. All right, okay, so continuing, let me share my screen again. Okay, Okay, so here, Wednesday, all right, in a few hours, midnight 30 for me, we're gonna have core CPI and CPI for Canada. All right, so very, very good for Canada. We're gonna have a bit of volatility happening in there. So interesting, we don't have any consensus for the core CPI month over month and year over year, as we can just see here on the screen. We know the previous that was 2.6% year over year and minus 0.5% month over month. Core CPI, all right. Now for the CPI, we do have month over month and year over year as well. Gen. We do have consensus 0.4 for month over month, sorry, and 3.3 for year over year, declining from 3.4%, and as well as increasing here 0.4 to from negative 0.3. So that's basically 110%, a little bit more, 112% up move there. That's going to be very interesting for any currency that holds CAD on its structure. So that may be Australian dollar, that may be US dollar, and what else, and a few other emerging markets that we don't trade. Okay, so just pay attention on that, and of course Canadian dollar. So just pay attention on that for I would say today for some of you, yeah, today for some of you, but tomorrow for me. Nothing much here then. Straight, oh wait a minute. Oh, that's okay. That's nothing. Then we go for Thursday. Okay, Thursday is going to be a very, very big day, especially Friday as well for US. But I just want to pay attention on here because we don't have much happening before that. So we're going to have lots and lots and tons of speakers, all right, on this day. So do pay attention. We're going to have member Dinger speaks from the Bank of England. We're going to have member Bostic speaks from FOMC. Governor Gravelli speaking from Canada. We're going to have consumer confidence. This is pretty good as well for Europe. But this is not the actual consumer confidence. This is a preview. What else? We're going to have FOMC meeting minutes. This is going to be very, very interesting to read through. So make sure, if you don't know how to access these, soon as it gets off tomorrow, I can come here and send it to you guys. Luca, can you give your point of view regarding WT later on? Yes, I will. As always, I will give it my view. Just relax and then we go for it. What I want to show you, I want to show you FOMC. It's simple as that. Okay, FOMC minutes. If you just type that on Google, you're gonna be going for this page, and on this page you have the statement and the minutes. Okay, so if you go, we only have January, so let's go for 2023, and if we have the minutes, it will be just on the side here. Okay, so you can just click on HTML, it will open the page on Google, or either you can download the PDF. Okay, you have to you have the choice to do it. Anyways, so as we're saying, Thursday we're gonna have the FOMC minutes, so very important there. Okay, then after that we're gonna have a series of manufacturing and services PMIs for Europe, for UK, as well as for what else? Oh yeah, for France here, okay, and German. So very important. So pay attention on those data. And then after that, CPI and core CPI, month over month, year over year, similar to the Canada one today. Sorry, tomorrow for me, today for you guys. We're gonna have CPI. Very important for euro dollar position. Okay, as I'm still holding my short position on euro dollar, I do believe that it can continue to go further down there. All right, and then Friday we don't have that much as we had on Thursday. We're only gonna have German GDP, some members as well speaking, and I can't forget, of course, the initial jobless claims. core retail sales and retail sales for Canada. What's this? Oh yeah, that's manufacturing. Yeah, that's pretty much it to the week. Okay, so that's how we're gonna roll the week. We're gonna be focusing on USD JPY, Euro dollar, Pound dollar, New Zealand dollar, USD CAD, and so on. Of course, the commodities, gold, WTI, Western Texas oil, and so on, because this is where the movement will be during the week. All right. So let's just address Euro dollar position here. I don't know why my drawings went off on this Euro dollar here. I don't have a clue. It was all perfect, but anyways, that's fine. Don't worry. Okay, so let's go for 4 hours. Well, we can see here on the 4 hours that we do have a very nice formation of a downtrend. Okay, how can we see that? Well, basically, if we look at the bottoms, it has been breaking since the top. Okay, so wait a minute, let me just put this all together again. Okay, and then this one here was the last one. Right, so we are on a very top of the range at the moment. Okay, if we look at where's my pencil, just a second. Okay, cool. Okay, so as we had, we were going down, we were still going down, but anyways, as I just mentioned, we went to the top all the way to the borderline at 107. We just got hit last week on Thursday, right before the week finishes. But what I want to mention is we have this as the top and this as the bottom at the moment. Okay, if we get this top broken, there may be a possibility of the market continue to go higher and 107 actually be the bottom of the euro dollar. But remember, guys, we do have some very strong news happening for Europe, as well as surrounding of Europe, like Germany. Sorry, on euro area, as well as surrounding that on German and UK, that this may influence this may influence and will influence the market. All right, some people want to join here, sorry, didn't show them. So if we actually get a breakthrough this level here, what it is, 108, somewhere about 108, 108, 50, somewhere around that, then euro dollar may starts to become a buyer, but I'm not too keen to long on this scenario at the moment. Okay, looking now, we do have a possibility to break these lows here of the 107 that we just put it last week and do continue to go down. Okay, so what I will be doing is I still have my position in. Okay, still have my position, it's somewhere around here, and I just want to watch if the market will break or whatever it will do if it comes to this area here. Okay, if it comes to this area, I'm going to be watching pretty good. I'm going to be looking at it pretty well, because if it breaks in there, then the downtrend does not configure anymore. All right. Do I believe it will happen? To be honest, nope, I don't believe it will happen. I do believe in one way for euro dollar, and this way is down. Okay, because dollar strength does continue and dollar reassurance on the economic aspects does continue. Oh, they have a debt, a huge debt. I know they've been there for ages and no one cares about. All right. Oh yeah, but Biden say that. Well, Biden doesn't control the dollar. Fed does. All right. Oh yeah, but then something's gonna happen with China. Well, they've been doing this for 5, 6 years already, and nothing happens. If it's going to happen now, that's good. We just switch hands, you know. So we need to work with what we got, and this is what we got at the moment. Okay, this is what we got at the moment. Stronger dollar, weaker euro. Sometimes euro, it's a little bit stronger than the dollar, therefore we do have those pullbacks, but not all the time. Okay, so we are forming a box. Okay, remember, I've always mentioned about the boxes and so on. That must be annoying from now. I always say, oh, there's a box here, there's a box there, and so on. But because it works, okay, so no, it's not an uptrend here. It's not something like this, okay? No, it's just a random consolidation, okay? I want to do a very quick sort of exercise with you guys, all right? I've done it on the very start of the webinars, but I want to do it again today. Anyways, so most probably that the market will continue to range until Thursday, okay, for to see what's going to happen with the CPI, and then from there the market will react instantly with that. It does have, of course, remember guys, if it comes as expected, then it's priced in, the market won't move too much. Well, it may go up a little bit down and come back to the area that it started. Okay, so we don't have huge moves when the news comes as consensus. But if it doesn't come as consensus and it comes lower than expected, damn, that's going to be a huge move. All right, on the market. Anyways, very big volatility. Oopsie, where is this? Oh, here. Okay. Now, my perspective on here is we may do something similar to this. Okay. And continue to break this bottom. If we actually break this bottom, that will be very good for a continuation below the 107. All right, my first target of the year was 107, and I got hit. So that's good. First one got hit. Now I still have euro dollar open. Sorry, euro Aussie, euro Audi. Okay, I still have this trade running. I can show it to you guys later. Nearly got stopped out there, like by what? How much was that? About actually 4 pips, all right, less than 4 pips. I nearly got stopped out, and then after that, the market basically came back. And yes, again, what just happened here was my pen. My pen keeps going away. I don't know why. Remember, the box is there. The power of the box. If you want a short on the top of the box. If you want a long on the bottom of the box. Don't ever enter in the middle of the box, because then this can happen. All right, nearly got stopped out and then it came back. Imagine if I just waited to get on the top and then shorted. Okay, that would be much better. Risk reward wise, whew, much better. All right, risk wise, don't even talk about it. Okay, I've run at a big risk on here. Well, luckily, this was luck. Okay, this is not oh, I'm an OG. No, this was luck. This was luck, but the trade is running. If you want to know why I've took this trade, go to YouTube and search it on ACY Securities. Last when was that? Last Tuesday webinar, 13th of February. Okay, now what I want to talk about USD JPY. This is the big boy. This is where fortunes will be made and lost on the market. Okay, this is where most people will be intriguing, and most of the bankers and analysts, big traders, quantitative firms will be looking. So USD/JPY will have my spotlight definitely, as it's having on other business at the moment. Now, I don't want to explain all again about USD/JPY because all of you already know what's happening, and what is actually moving USD/JPY is not the US dollar, is the Bank of Japan and the situation that the Japan and the Japanese yen it is at this beautiful moment. All right. Is anyone trading USD/JPY just before we start? Just say me yes or no. No one? Okay. Okay. What do you have any position open, Kumalo, Casey? Or you guys just do trade it or don't have any positions at this exactly moment? Have a long on Euro pound, Euro yen. Euro yen. That's good. I do have a long on Euro yen as well. Did you got the same trade as I did last week, Thursday? I got Euro JPY. Let me open my MetaTrader. So that's Euro Aussie there, Euro JPY here. Oh no, why is not? Okay, got here, so I'm like what, 330? Oh, 60 pips. That's pretty good actually. Euro dollar, pound dollar, still holding, and Euro Aussie still holding. How many pips am I in? 30. That's nothing. Anyways, moving on, stop loss, long USD/JPY at 149. 149. Oh yeah, there you go. There you go. That's a good trade, man. Let me take this off. That's a good trade. Let me show you something. Look at what you just got, a box. Huh. I don't know if you opened the trade because you saw the box, you know, and you looked at the macro and everything, but that's a good trade. Congratulations on that. Okay, very good. So everyone does trade USD/JPY. So what I will talk now will definitely make sense for you all. Okay, let me see if it's okay. I have the images here. There you go, and this one as well. Okay, now 150. That was the level of intervention that the Bolge have done last year. Okay, if you look at the daily chart, was on this level here, 150 to 152. Okay, was on this area. It started on 150 and we had this massive drop. It just touched it in there and it went 2,862 points. So that's 286 pips down. And then it recovered up, broke through the 150 here, and then retested, and then back, boom, down again. Okay, and that was much bigger. How much was that? That was 1,176 pips. So that's 11,000 points. So that's pretty big. Now the question is, we are on that level again. Okay, USD/JPY have been one of the best performers nearly 6%. That is 9,000 pips. Sorry, 9,000 points. So that 931 pips. So that's not nearly 1,000 pips. So that's pretty huge move since beginning of 2024. So we only had roughly 40, around 50 days, 49 to 50 days of trading days that actually the market was moving. And that makes me think now, will USD have another 11,000 points drop, or will it continue to fulfill the movement up? Well, my most certain option here, looking at the scenarios I have, is simple. USD will continue to drag higher. Okay. Why is that? Well, let's have a look at Japan GDP. Where is it? Here. Ooh, I can't look quarter. Okay. Wait a minute. Just a second, guys. Quarter to quarter. Maybe this one. Yes, there we go. Okay, so this is Japanese gross growth domestic product growth rate, but quarter over quarter. Okay, so 3 to 3 months. And what we just had? We just had two consecutive negative. Well, we do have one more here, but it's not showing at the moment. But believe me, we are basically on two. Oh no, we don't. It's here already, January 2024. So negative 0.1% and negative 0.8%, two consecutive GDPs, lower GDPs. All right, so two consecutive quarters of very bad, especially on the Q3 here that we had for Japan. It was very, very bad. And remember, what does happen when we have, or someone wants to join, and what's happen when we have a technical recession, as I just explained it for you guys. All right, unemployment, higher unemployment. Okay, so people will be unemployed. We will have a reduced on the consumer spending, so people won't be spending money on the economy. And with that, we have a lower business investments. Okay, because, well, as a business, you don't want to invest in a country that people don't want to buy your product. Otherwise, you're going to be broke forever, So therefore, this is one of the reasons. Second reason, of course, the Bank of Japan, they are saying that they will hike the rates soon as reach 150, 152 level. Well, what can I say about that? Right? What can I say about that? This is a very good way for them to manipulate for free. Not in what I mean by this is for free in a sense of they don't need to spend money to sell to buy Japanese government bonds, so then Japanese yen can become strong and continue to drag the US dollar down, all right, as it did where it just here where you can see it. So in a sense, I do believe that they will hike interest rates, but not now. Why? Would you hike as a big corporation like a central bank organization like the central bank, intelligent and smart, very smart people? Would you hike interest rates when people don't have a consumer power of spending? Would you hike when there's lower business investment? So basically, you're stopping even more to actually people do invest on the economy. And how will people pay their mortgages if they're unemployed as well, because there is an increase on unemployment? So that's not a smart choice to be doing. Okay. But what is very intriguing here is if we look at the Japanese 10-year government bonds, the JGBs, look at how much it went up already since the beginning of this year. That's more than 17%. Okay, it went all the way to 23%. So imagining you making 23% in a single month. It's just crazy. Okay, so my question here is, why is as well, okay, why the big banks are taking off the position on the Japanese yen? All right, so they were negative 30, negative 31, 22, 16, 11, 16, 15, and now 19. So that there is a drop. Okay, all the way from 26th of December last year, from 30, we've dropped 11% on that percentage. Okay, we've added some short, we've closed some longs. So in the majority, the big boys, the leverage funds, they are on a negative net percentage exposure. So that means that they are short. Okay, look at that, 48 short positions. All right, they just increase it, 48 short positions. So to be honest, I do think, again, the USD/JPY, it is a good trading for this year. If you know how to trade very cautiously and using risk management, that's a good one. That's a good opportunity. All right, that's a very good opportunity. Now, talking about gold, gold will continue its trend. Basically, as I've just mentioned, I got hit on my target here. That was this area here, 1990, I think, 1990. Yeah, 1990. And now it just retrace it back. I don't have much to talk about gold at the moment. As you guys know, I only talk about gold when I do have something, and I've called the short position since the top here. Okay, since the top. All right, so that's more than $70 drop on gold. Okay, now WTY, tensions are getting stronger, and this is actually driving the oil prices to go up. Now, remember, we are on a consolidation, so there may be a possibility of the market to come around these areas. Okay, around these areas here. Okay, so just bear in mind, we may still in a consolidation, since sometimes the conflicts are stronger, sometimes it's weaker. But remember, the most important thing for this year are the central banks. Okay, so yes, they will drive, especially Canada, US, and Australia, and so on. They will drive the WTY price. But I guess there's not much to talk on here. Most probably we will see a little bit of a push up again, and maybe down if it doesn't break on top. But for now, it just has been doing what it's supposed to be doing, you know, and down, and then up, and then down again, and now up. Okay, so that's basically a very poor view, I know, but it is what I'm looking on the oil prices. That's all from me today, guys. Do you guys have any questions? We do still have 3 minutes, so please just shoot these through.
Yeah. Hello, Santos.
Hello.
Yeah. Good morning.
Good
I'm
morning.
greeting you from where I am.
From where? Sorry.
Oh, from Ghana. From Ghana.
Oh, from Ghana. Cool. Do you have any questions, Amos?
Oh yeah. I have a question. I think
Okay.
I've been speaking with you before, but you have been a little bit busy. That's why I'll stop calling you.
Oh, okay. Yeah. Okay.
Yeah.
Go for
Yes.
it.
I didn't get the Euro USD because I didn't attend the meeting earlier. But
Euro.
aside that, how do you call it for your Telegram channel? Uh,
Okay.
yeah, I didn't get the link.
Oh, okay. The Telegram channel. I can send that to you again.
Uh,
Which pair did you mention?
oh, Euro USD.
Oh,
I
Euro
mean,
USD. Okay.
yeah, for now I'm shorting it.
Okay. That's
So
okay.
I want to
Cool.
see.
So do you want
I
to
want
see
to
my
see
view
how.
here again?
Sure, sure, sure.
Okay, cool. I can do that. I've just sent. Can you tell me if you did receive on the chat here the link for the Telegram?
Ah, okay, I've seen it. Okay, let me try and get it.
Okay, try it out and see if it works.
Okay.
As you're doing it, I'm going to explain euro dollar again, just
Oh,
so you
okay.
have it on the background. So euro dollar, it's a very simple trade in my opinion. Okay, we having a thanks for the question first of all, Amos, and thanks for actually coming here and talk to us. That's pretty good. I like to have those types of interaction, and I incentivize and encourage everyone to do actually open the mic one at a time. Otherwise, it would be a confusion. To come and talk. All right, that's all fine. Don't be shy. Okay, so Eurodollar have a very simple approach, in my opinion. Okay, we are having a confusion between people looking to central banks, but when it comes to the Fed, it has been pretty clear that they won't be cutting the rates soon. And on the last FOMC, we did so. Jerome Powell, that's the Fed chair, coming and stating like we're not ready to cut the rates. People think most of the market thinks that we would be cutting rates in March. That's not going to happen because we don't have data. And just now we had a very strong CPI data. Okay, we did have a much strong CPI data. Most probably we're going to have a very good manufacturing and services PMIs as well this week. So in terms of the US dollar, it is pretty strong. In terms of the Europe, now we have the Central Bank of Europe, the ECB, European Central Bank, that haven't been on a good foot since last year. They've paused, and paused, but they're always Lagarde. I do like her. She's a very good professional, but she just imitates what Jerome Paul says. If you pay attention on her speech and Jerome Paul's speech, of course, it's not the same, but it's similar. Sorry to say that, but it's similar, right?
sure, sure.
And then when we have euro dollar combination, I do believe that we will continue to go down even a little bit more than 107, to be honest. Maybe 106, 105. We need to see. That's my take on euro dollar, guys. Any more questions? One, two, 2.5, three. That's it. No questions. All right, guys. Thank you so much for everyone to joining us today. It was a very good webinar. Hopefully, it could help you all. Hopefully, it could help you all. And if you still have any questions, you know how to contact me. Just please go to the Telegram and look to my chat and call me there. All right. About the FOMC, you mean the FOMC minutes, right? Yeah, mate, look, most probably we will do expect a little bit of move. Thanks, Marco. Thanks, AH500. Thanks, Matthew. Thanks, Eboka. Thanks, guys. Thank you. So, Kamala, yeah, we do, of course. Thanks, Amos. You also, man. Thank you so much. Very big hug for Ghana. No, Yeah, we may expect a little bit of move from the FMC minutes, just because it's the minutes. All right, investors will be keen to look what will actually happen, what they would actually discuss on the last FMC, as it was one of the biggest, expecting. But the biggest one, I think, will be in March. Okay, the biggest minutes will be March. But yeah, we can expect a little bit of move, yes, on the on this Thursday. Yep. All right. Have all a good week ahead, and I talk to you guys on Thursday. See you guys.